Welcome to the Galileo Capital August update. My name is Katlego and I'm here with Warren. Warren, it's been a very volatile July. Initially, it was the looting that we saw locally, and then towards the end of the month, the Naspers share price going down. Where are we now, and what's your take on it?
No, Katlego, I think it's the Chinese curse. May you live in interesting times, and I think we're living in very interesting times now. So we did a special update around immediately after the looting, and I think it's worth just going back now with a few more weeks of time under the belt to look at what's carried on happening, and then what do we think about this situation going forward. And I think there are a couple of comments to make. One, the whole security cluster in South Africa, whether it's the police, the state security, the army, were clearly exposed as incompetent in this. The reality is that it was ordinary citizens that took action to protect property first. It was ordinary South Africans, the taxi industry, just Joe Public, who actually just stood up and put a stop to this. And only then did we see, the security forces reacting and responding. And so I think it does point to a huge deficit in that security cluster, and we did see some infighting, in Parliament already, straight afterwards, where ministers were trying to throw each other under the bus. And I think what's critical there is to see that that issue is resolved, that we see an element of competence coming through. But what has been good to see thereafter is that government, and when I say government, I really do think it was the presidency, reached out to business and got a clear indication from business as to what's required to restart the economy, to unfreeze the big, transport links around South Africa, and whatever business required was what was implemented. So I think that's a critical point to understand, is that the plans were taken away from the security cluster and actually were implemented according to what business was explaining to government was required. And I think that's a huge issue to understand, that the right people in government are listening. And I think a lot of the focus from the media is on the incompetent cabinet ministers. And for me, just to be clear, I think a lot of government is being run out of the presidency's office. It's not being run on a decentralized basis by various cabinet ministers. I think it's clear that the finance minister is in charge of the finances, and one or two other ministers are doing a good job. But whether it be security or energy, those are being run, I feel, out of the presidency. So let's be clear that some of the incompetence may not be affecting us as much as we think. And so I think going forward, certainly, if we look at what's going on around the security issues at the moment, the violence hasn't picked up again, the looting hasn't picked up again. There may have been isolated incidents, but I guess they're also attracting more attention than they normally would, because the country does always have an element of crime, across the board somewhere along the line. And so the press are now blowing up those kind of, I almost want to say, ordinary crimes as potential looting, etc. And I don't think that that's right. But we need to see what happens in the weeks and months ahead. I think on a different note, looking at what's going on with Naspers is a concern. We need to know that, and really it's being driven. That the collapse in the Naspers share price is being driven by Chinese regulators, almost attacking the tech sector in China, and I don't think it's willful destruction of the tech sector. I think it's the Chinese government's way of trying to rebalance these big monopolies in the tech sector in China to create competition and to foster economic growth again. Whether they're doing it in the right way or the wrong way, we won't know until the months and years ahead. But certainly it's no different to what the regulators in Europe and America are trying to do with Amazon and Facebook, etc. But they just do it in a democratic way rather than an autocratic way. So it is causing a major shakeup in Naspers. Our kind of expectation is that Naspers's business model is much stronger than just its holding in Tencent, and so it does have an enormous number of holdings inside the company. It's not just the Tencent holding, and if that strategy that Naspers has been promoting for the last decade is true, then we should see the strength of Naspers coming through in other parts of its business now. If that strategy doesn't hold true, and the tech sector keeps getting hammered in China, we could see a big, continued drop in the Naspers share price. So for now, our view is to watch and hold. If you're an individual Naspers shareholder, we don't think you should react in panic, which is kind of a standard for Galileo. We never react in panic, but certainly it is something that we are watching very closely. Naspers is such a big share on all indexed investments in South Africa, and China is such a big part of the emerging market indices around the world that it is worth keeping a close eye on. On a very positive note, it's worth noting that at the end of July, the government did reach a public sector wage settlement with all the public sector unions, and it's exactly in line with Tito Mbowene's budget as promoted in February. So it's a critical point that where a lot of skeptics were saying, there's no chance that an ANC government will maintain fiscal discipline with the public sector. They will renege on their promises to the country at some point. None of that has been proven true. There is a 1.5% salary increase, which was in Tito's budget. And there's also an additional smaller amount of about 1,500 Rand, which is a once-off cash payment to workers. That amount might sound like a large number when you add it all together, but it really is impactful only on the lowest earners in the public sector. So, people who are cleaners, security, etc., for them it's a meaningful sum of money that helps in the times of COVID. But for the average worker in public sector who's earning 300,000 Rand a year, it's not a meaningful number. So it's not a huge number in the scale of the economy in South Africa. So I think, on balance, very unsettling time to have gone through these riots and the looting in South Africa. Very comforting, if that's the right word, to see that ordinary South Africans are not on these fringes, these radical fringes. They do want to maintain, law and order. They do, and they will do it with their own time and effort and at some risk to themselves. So for us, it reinforces the view that what we read in the media and what we see on social media about sort of the fragmentation of the fabric of South Africa is not true. That South Africans actually, racial harmony is improving, and more South Africans want a better life through hard work and through discussion and negotiation than through violence. And I think that's a critical point for us to remember when the newspapers are screaming at us and social media is screaming all the time. And critically for all of us to remember that we've learned yet another painful lesson, which is social media and WhatsApp groups are just not your friend in this. The number of times we were all going to get invaded and destroyed and blown up. We need to realize that there are people out there who are acting with malicious intent to unsettle ordinary South Africans. And the problem is we're getting those messages from our friends, our family, and so we believe them. We're not putting a filter on that. And that would be my one message is you need to filter the information very carefully. And I think stop forwarding messages that you don't know the source. We got one from Clem Santa, apparently, that had done an analysis 2 days after the whole looting was done. And that was never Clem Santa's work. It was just someone manufacturing an analysis, trying to get credibility by adding Clem Santa's name to it. And that went like wildfire in the mainstream media as well, but starting on WhatsApp. So I just think that would be my one comment to everyone watching is just filter your news incredibly carefully. Only rely on trusted sources here. And WhatsApp, I'm afraid, is the least trustworthy source you can find right now, and especially if it's coming from friends and family who are just mindlessly forwarding things, as if it's gospel. It's unfortunately not true. So with all that being said, Katlego, with all this volatility and the unsettling market conditions that we've got around the world, what should our clients be doing? What should our investors be doing now?
Warren, I think it's important to emphasize that our clients should remember that when we put together their plans, we know that markets will be volatile. So we generally prepare their plans accordingly. And it's important to remember to stick to that plan. And because it was built considering the market volatility. And then going forward, for clients who want to invest new money, we still think it's a good idea to phase in to smooth out the volatility initially. Locally, we think 6 months is a good phase-in period. And then internationally, we still think 6 to 12 months for a phase-in. And then considering the Rand to dollar exchange rate, our mark is still to take out money when the dollar is anywhere below 15.50 Rand.
Yeah, I think that's a valid point. You know, these strategies are built to cater for volatility. It doesn't mean that we can predict that it's going to be a looting spree in South Africa, or the Chinese regulators changing tack completely. But what we know is that there will be volatility, and so when we do build these plans and strategies for our clients, that is part and parcel of it. It's never great to see. And we certainly get really uncomfortable watching big moves in a day or a week. But what we know is that patience is incredibly helpful in a situation like this. So I think on that note, just from us at Galileo, we hope that everyone stays safe. We are really glad to see that the vaccine program is ramping up in a big way. And that government is certainly willing to incorporate more private sector role players in the vaccine rollout, and they're aiming for 300,000 to 400,000 vaccinations a day, and certainly if July is anything to go by, they have ramped up very significantly, and we hope that continues. And then we are very grateful that they are increasing the allocation to younger people earlier. The fact that basically any adult in South Africa will be able to get a vaccine from the beginning of September, we think is a good move. It removes the unnecessary complexity of having to do different employer groups, etc., where it's difficult, if not impossible, to track. So if that vaccine rollout continues at the pace that we hope it will, it's very likely that the bulk of adult South Africans have at least one vaccine in their bodies by the end of the end of this year, if not the first quarter of next year, and that will have a huge impact on reducing the waves of COVID as they work through the world and South Africa. So we urge you to stay safe. We urge you to continue to be cautious with this COVID, but not to panic around your investments. We are watching. We are worrying on your behalf when we need to, and we will take action when necessary. And we will look forward to catching up with everybody again in September. Thank you so much.